Then we learned about ROI and RI. On little similar to RI was the concept of economic value added, but then that has it was not a simple profit which was taken, but it was little different about um, taking the economic profit, that is net operating profit after tax, after making all non-cash, non-operating adjustments to the profit, arriving at net operating profit after tax, and the capital employed at the end of the year was also adjusted, and then arriving at what is the capital employed at the beginning of the year. So that was the concept of economic value added. I mean, last week only I said I will work out questions, case studies, and proceed further. Now only you are there, so shall we look at any case study or continue with the content? And when the students come join, we can.
Today we can continue with the content, ma'am.
Okay, done.
When I,
2, 3 students are there. I mean, they participating in the class would make it uh, interesting. We'll
yeah, yes,
proceed
ma'am.
further. So the next concept here is value-based management. The concept of, just help me. What was the last topic? I am assuming it is economic value added. Did I do anything?
Yeah, no, this was not done, ma'am.
No,
Only that
economic
economic. Yeah,
value added. Okay. The next concept is value-based management. It is an approach. See, value-based management focuses on adding value to the stakeholder, but very specifically, the value added to the stakeholder is the shareholders. See, when the management has an approach of maximizing the shareholders' wealth or adding value to the shareholder and taking decisions related to that, we call that concept as value-based management. Okay, it's conceptually just have an understanding about that. So if there is an effort from the management side to maximize the value that is added to the shareholders or maximization of the shareholders' wealth, that will be referred to as value-based management. The next concept is what is transfer price. So what's transfer price? The transfer price is a concept where now responsibility accounting talks about the organization is divided into departments, divisions, or business units. The performance of each of these units is also measured. Each center is also measured in terms of uh, what measures do they take to maximize the profit. So, for a cost center, how they would minimize on the cost, what measures would be taken to cut down on the cost. In case of profit center, both the cost control measures would be exercised as well as maximizing the revenue that is generated. In case of investment center, we see that ROI, RI, these are the variables which are taken into consideration to measure the performance. So performance would be evaluated. So every department, every division or responsibility center, the managers who are appointed will also be held accountable for the decisions they take for their department. So that will create a kind of competitive environment within the organization, wherein they are more focused on performing well, better than anyone, or um, the the performance is up to the mark, because at the end of the accounting period they would only be evaluated based on what is their performance, what are their profit margins, or whether they were able to cut down on the cost. In such a scenario, if we see that if there is one internal department, so let's name that department to be as department A, they produce some product, produce a product, let's say there is a product X that is produced, which they are also selling it in the market. See, there is demand for this particular product. So they are selling this to the buyers in the outside market. Let's take this as the scenario. Now, if this is the situation, if there is another internal department which requires material X, so whatever is the output of department A, using that output, using that material as input, they plan on producing something else. So there is a requirement of the output that is produced by one department by another department internally. So if let's say there is another department B requires this product X, or this they want it as input so that they can take up some other project and produce some other product. Now, if this is the scenario, what is the price at which the material would be transferred to the internal department? The concept here is, because A is already selling the product in the outside market to the customers in the market, so they would have decided the selling price. Usually the selling price is decided as cost price plus profit. So the same is the price they would want to charge to the internal department as well. So because the selling department, now A would become the selling department. The selling department already is selling these products at a decided price. The same is the price selling department would want to charge to buying department. But from buying department point of view, B being the buying department, it would increase their cost because there is a profit margin added. So it would increase their cost, and if it is high cost, then department B manager also would be evaluated for not cutting down on the cost. Now this is a scenario or a situation or dilemma which arises, wherein how would they decide on what is the price? Ultimately both of them belong to the same organization. If one department is benefited, it is the benefit of the organization. If one department is at a loss or not at a benefit, it is also not a benefit for the organization. So now how do they decide on that? So for that we see what are the different in simple terms, what is transfer price? A price at which the material or goods are transferred from one department to another department. What would the price be decided on those goods? So that is the concept here about what is transfer pricing. So how would the price be decided? We see that there are possible situations. We see that there are possible situations. The first one talks about if the market is a perfect if the competition in the market is perfect, or it is a perfect market where there are many buyers and many sellers. If that is the situation, all the output that is produced by the selling department, if all of them can be sold in the outside market, if the market can absorb all the output produced by the selling department, then the selling price or the transfer price which will be charged to the buying department would be the same market price. Whatever is the price offered in the market to the external customers, same price will be charged to the internal department as well. See, when one department has the possibility to maximize the profit, they should not forego on the profit by reducing the profit, reducing the selling price, and transferring these materials to internal department. See, if they are foregoing, if they are compromising on the profit margin, one department compromises on the profit margin which they earn, it is a loss for the organization also. So now the same selling price should be charged to the buying department. If buying department is not agreeing to that price, then the selling department can sell all the units in the outside market as usual. Buying department on the other hand will approach some other supplier in the market. Maybe it could be at a lesser price. So there could be a possibility that some other supplier with a substitute material or some other products at a lesser price or same price or whatever is that, that is a possibility. So in that case, see, Selling department will maximize the profit, which is the benefit for the organization. Buying department, on the other hand, finds an alternative way to minimize on the cost. That is also benefit to the organization. So the first
Ma'am,
situation.
one question here, ma'am. Ma'am, it is only the transfer pricing of a product is only between the internal departments, or
That's
it can be between the branches also, like one branch to another branch.
Branches are also part of the same organization. No? So
Yeah.
organization wise, we are talking about
Okay.
units. No, units could be branches also.
Okay.
All
Okay.
of them may not be located at one place. See, transfer pricing issues arise even if it is international transfer price also. Sometimes we have the manufacturing unit in one located in one particular country. Other units maybe they are only assembling the models.
Actually, Nirav Modi used the same thing to bring the diamond prices high, no, ma'am?
That's right. So there we see, I mean, the transfer pricing issues become complicated in terms of when um, they want to take advantage of the tax differences in different countries. And see, putting aside the local material that is available, but to just to get benefit out of the tax differences or certain other things, such kind of things also take place. They do take place?
Okay. Okay, ma'am.
Yeah, so it need not be present at only one location across the world. But only thing is they should belong to the same organization.
Yeah. Okay, ma'am.
Yeah. Okay. The next situation is where there is surplus capacity. So surplus capacity, let's say that there is on a scale of 0 to 100% capacity available. Let's say um, a particular division is operating at let's say put it as 60%. So they are operating at 60%. So still 40% capacity is unutilized. So this is unutilized capacity. By utilizing this capacity, they can produce additional units and supply to the buying department internally. Now, what would be the transfer price in such situation? Since they are already operating at a particular capacity, so producing and selling is already taking place. So in that case, the selling price that is already decided at the capacity, at the present capacity level, would have taken care of the fixed cost also. So selling price would be the total cost plus the profit margin. So total cost um, comprises of both the variable cost and the fixed cost. So fixed cost is a cost on a scale of 0 to 100%. So we see that there is a variable cost, there is a fixed cost. So you must be remembering about cost volume profit analysis. We see that on a scale of operation from 0 to 100% capacity, there is a cost which is incurred right at the time of zero number of units, and it does not change till it reaches the maximum capacity. So that cost is called as fixed cost. Variable cost is a cost which varies proportionately with the output. So at zero number of units, there is no cost incurred, but as the number of units produced increases, the variable cost also increases. So we know the behavior of these costs. So there is a cost called as fixed cost, which is, the total fixed cost is the same at zero number of units and at till the maximum number of units. So when the selling price is decided, the selling price would have taken care of the total fixed cost. So even if they are now operating at the unutilized capacity level, they will not have to incur any fixed cost because it's already incurred, and that incurred fixed cost is already taken care of. No more additional fixed cost will have to be incurred when they are producing above the present capacity level. So over and above the present capacity level, any unutilized capacity, if they want to explore that and then utilize that, only the variable cost will be incurred. So they can charge a price as low as the variable cost. So anything as variable cost plus a profit margin can be decided as the transfer price to the internal department. So, of course, this is only internal adjustment. It is not allowed by the tax authorities or for external reporting. These kind of difference, differentiated prices are not acceptable. But this is only for internal benefit that the internal department would be benefited because of the unutilized capacity available with one department. Utilizing that, they can transfer the material at lower cost. So as low as variable cost can be the price. Variable cost plus the profit margin would be the selling price decided on those units when there is surplus capacity available. Then we see, assume that they are already operating at maximum capacity. There is no unutilized capacity, so there are production constraints, which means that no additional production can be taken up. It is not possible because they're already operating at 100% capacity. We see that from 0 to 100% capacity, the fixed cost the fixed cost remains the same. That is what we are saying. See, if now they are already operating at this maximum capacity, anything slightly above the maximum capacity also, once again fixed cost will drastically increase. Full amount of till the next level, the fixed cost will increase and then it would remain the same till the next level. Now that may not be possible for units to increase their fixed cost drastically. So what is that they generally do in that case when there are production constraints? One option is that, see, if the activity is at a large scale, increase the capacity level. But if it is not at a large scale, little amount of additional units have to be produced and sold. In that case, it is not a good option to increase the fixed cost, increase the capacity by another 100%. That is not, see, proportionately capacity cannot be increased. So from this level, another 100% capacity would be increased, for which fixed cost would drastically increase. Therefore, now here what we see is there is production constraint. Okay. So as of now, um, whatever is being produced, out of that, few units are, I mean, produced, the few units produced are diverted to internal department, not supplying them to the external suppliers. So some of the units can be cut short or while supplying to the customers in the market, or there when they have multiple products in their product line, some of the products can be dropped, stop producing those products and utilize those resources to produce the material that is required by internal department. So that is in a situation where there is production constraint. The already fixed cost is taken care of it. So when they make a change, that change will require a variable cost, because they would be foregoing something by not producing all the units to the suppliers, or all the products, all the units to the customers, or all the products to the customers. So there is something which is foregone, some benefit will be foregone. They will have to forego their contribution. Fixed cost anyway would be the same, so it's not the profit, but it is the contribution. They will be foregoing contribution on the units that are not delivered or the products that are not delivered to the customers. So the transfer price in situation where it is production constraint is variable cost plus the opportunity cost. Whatever they forego by not supplying it to the customers, that amount should be recovered from the internal department. So the transfer price is decided as variable cost plus the opportunity cost. What are the methods of transfer pricing? So basically, either it is market based pricing or cost plus. Market based pricing would be when the competition the market is a perfect market and the competition is also perfect. So in that case, the same price, whatever is the price offered to the external customers, same is the price which will be offered to the internal department as well. If it is cost plus, see, cost plus could be total cost plus profit or variable cost plus profit. There are two different types of cost plus prices which can be decided. It could be two-part pricing. One price is at total cost plus profit, another price is variable cost plus pricing. Okay, two-part pricing. See, what are the issues with the cost plus pricing? We see that supplying division wants to use total absorption cost to recover fixed cost, but the buying department want it at a lesser price. Supplier's fixed cost becomes variable cost for the buying division. This can lead to wrong economic decisions. That's an issue which we can see, because when they are buying the material, see, the cost of material is variable for them. It is variable in nature, but for the supplying department or the selling department, partly fixed and partly variable, their total cost is. So we see that it is one portion of it is fixed cost, one portion of it is variable cost. So when accounting, it is they would be accounting it in different ways. Then one price which is total cost plus profit is also used for external reporting. This variable cost plus profit is only an internal purpose, for that they record. So it may not get the approval of tax authorities. That could be one thing. We will be working out one case study on transfer pricing issues. So all these methods about how negotiation happens, and then how a decision is taken about variable cost plus profit margin, or what options are available with the buying department if there is an external supplier present in the market. In that case, what kind of decisions are available with the buying department, etc. So one case study, see, there are many case studies, but on transfer pricing, but I will solve one question in the class so that you will have an idea about how to proceed further in the examination. Okay. So that's about performance management for profit organization. Those organizations that are seeking to maximize their profit. There is maybe a few topics like transfer pricing, economic value added. These are new terms, but otherwise we know how to measure the performance of a profit organization. See, that's nothing new, because right from the time you've learned management accounting, you know how to calculate the ratios, and then how to interpret the or assess the performance of the organization. Interpretation also, all these are not new, but some new topics that are included, I think, related to that, if you learn that, that would be sufficient. The paper is advanced performance management. Therefore, if we have ended it very soon, do not think that this is not important. This is the most important, but because there's nothing new that we have to discuss here, because the student already knows, so there is a lot of expectation from the examiner's point of view that the student will be able to answer these questions. Most of the time, calculations related to these topics would not be expected, because the calculations, a budget would be prepared, ratios would be already calculated and provided to the students in the appendix. So interpretation, analysis and interpretation is what is expected from the student. So that part of it, you have to be very clear. Know, understand whether the calculated values are appropriate. Did they use the right variables to calculate the ratios, etc.? What is the calculated value indicating? So what does it indicate? That part of it, that analysis has to be given. See, if there is a budget provided, budget may have different variables, and the performance, see, the objective of the organization, if it is to um, maximize shareholders wealth and customer satisfaction, let's say that if that is their focus areas, in that case, if the budget is only talking about financial performance, it has no variable, or the measurement has no variable covering customer satisfaction. In that case, the variables which they have used to measure the performance are not appropriate. So you have to address that in a critical tone. So it again focuses on what are the objectives of the organization. Looking into that, we need to address the question. I think when we take up one or two case studies on performance measurement, we will be able to do it well. Okay. Next one. The next concept is, how do we measure the performance if the organization is not for profit organization, NFPOs? Okay, not for profit organizations. Um, First, we need to know what is a NFPO. Yeah, as the name suggests, their objective is not to earn profit, leave us and maximizing profit. They Most of the cases they do not even want to earn any amount of profit. Revenue may be generated, but the objective is not to earn profit. In case of public sector organizations, examples are defense. In case of private sector, we see charities, any clubs, associate clubs established to take up some social cause or some um, charity work to take up. So any kind of such things in private sector. Now, why are they established? They are established to render services to the stakeholders. So any stakeholder who is benefited from by the organization, for their benefit, if the organization is established, we call it as not-for-profit organization. So here they do not see whatever are the resources. With that, they establish the NFPO and then carry on with the activities. Here it is not about maximizing the profitability. It's not about um, explore the opportunities that are available, maximize on the profitability. For that, additional investment required is raised from the different investors. All that would not be there. So on that note, there are no external shareholders. There are no shareholders. There's no concept of profit which has to be divided to them as dividends and paid dividends to them. Those kind of things are not present in case of a not-for-profit organization. But then the topic here is about how do we measure the performance. See, when profit is earned, it's a very easy and simple manner to measure the performance. Profitability indicates about whether they're doing good or not good. Okay, the easiest way. Now here the dependence on profit is not there. So how do we measure? Whatever is the objective which they want to achieve, if they achieve that, is considered to be as a benefit. As against that benefit, what is the amount of cost which was incurred? So for the amount of cost that is incurred, did they achieve the benefit or did they receive that benefit? Cost benefit analysis is one way of measuring the performance of not for profit organization. Non quantifiable costs and benefits. So use cost benefit analysis to overcome the problem. So um, the amount of cost that is incurred, but were they able to get the benefit? Cost benefit analysis. Okay. Now, in case of not-for-profit organization, the performance of the organization is measured by a concept called as BFM, value for money. We'll go to the next slide. We'll come back to this one. So the concept BFM is value for money. So the performance of an NFPO is measured by three E's. There are three E's in BFM, value for money. First one is economy. The second one is efficiency. The third one is effectiveness. Now, if the objective is not about maximizing profit, are they allowed to spend as much cost as they feel it is appropriate, or are there any measures taken to economize on the cost? So that would be looked into. Even if they are not looking at um, maximizing profit by way of minimizing cost, in spite of that, also one way which would be taken into consideration is, was there any effort put in? Was there any effort put in to minimize the cost, economize on the cost? Because the cost that is incurred is uh, to achieve some benefit, so to achieve some objective or to achieve some benefit. So if the cost can be minimized, this economized cost can again be used to provide this benefit further. Therefore, first way to measure the performance, whether they are effective, whether they are performing well or not, is by way of looking at what is the cost that was incurred and whether they were able to minimize on the cost. Second, efficiency. That's the second D. Efficiency talks about as much input they are introducing as against that input, are they getting the output accordingly? So, a measurement about input versus output. See, output here is achievement of the objectives. So, whatever is the purpose, achievement of that purpose. So, for the amount of cost that was spent, input that is introduced, did they achieve the output? Cost benefit analysis, that is efficient. For a not for profit organization, there would be, see, for any organization, there would be overall objective which has to be achieved. So, the overall objective, whether they were able to achieve the overall objective of the organization, both by considering economy and efficiency. So, by cutting down on the cost and by achieving the output as against the input. So, both of them together, considering that, and whether the organization was able to achieve their overall objective. Okay, that will be called as effectiveness. So there are three E's in measurement of performance of not-for-profit organization. These three E's are called as value for money. Now, assessing the use of funds, use value for money to overcome. Value for money encompasses three E's. Then we also see that there are certain other problems associated with that. The these kind of organizations may have, they may not have only one objective, they may have multiple objectives. In case there are multiple objectives, these objectives have to be prioritized. Which one has to be achieved first? So prioritize these objectives and put in effort to achieve these objectives. So in case there are multiple objectives, most commonly what is observed is, if it is a not-for-profit organization, there is lot of political interference. So impact of politics on performance measurement also would be there. So these are the issues with performance measurement of a not-for-profit organization. Why and how do we assess performance? So because the to understand whether they were able to achieve the overall objectives of the organization. So for that reason, to understand whether the objectives were achieved or not, performance has to be assessed. So why and how do we assess performance? First, difficult objectives are difficult to define. Then often multiple objectives, therefore it is difficult to prioritize. How do they measure the performance? What is the measuring unit? See, if it is profit organization, what is the profit percentage? So there could be a set profit target, there could be a set amount of sales units or sales value that has to be realized. Here objectives, to quantify the objective, sometimes it becomes difficult. So difficulty defining a unit cost. Then there are many different kinds of organizations such as charities, statutory bodies, and public utilities, because see, each one of them is different in terms of the objectives they have. So uniformly, all of them cannot be treated on par. They are not. They all are not on par or not the same. So each one, to measure the performance, it's a different way which has to be taken up to measure the performance. For that reason, see, many different kinds of organizations are there in under the category of under the heading called as not for profit organizations. Then there are different stakeholders who seek some benefit from the organization. It cannot be judged against competition or profitability. Then we see long term organizational objectives versus short term political gains. That's another important aspect. So, because there's a lot of political interference, so in the long run, whatever they intend to achieve, will they be able to achieve that given the situation that there is too much of political interference? So, that is all what we need to look into that. Now, going further, if we have to measure the performance of not for profit organization, there could be a comparative performance evaluation that can be taken up. So, in this context, we have a concept called as league tables that can be prepared. So, these league tables will have all the parameters which they use um, to assess the performance. Those things are taken up, the performance is assessed, and they are all entered into these league tables. So it would give us chance to rank the performance of different not-for-profit organizations. So when their performance is considered on a comparative note, automatically we see there are certain advantages and disadvantages of that. So there could be competitive environment which can prevail. Each one will compete against the other one because their performance is now observed, measured, and entered in league tables. Okay? This stimulates competition and the adoption of best practices, monitors and ensures the accountability of providers. Okay, um, because otherwise, if there was no such thing, if, whether they have taken any appropriate measures to cut down on the cost or what was their effort in terms of achieving the objectives, etc. See, that would not be accounted for anywhere. Now that it is on a comparative note, so everything would be accounted, monitors and ensures the accountability of the providers. Performance becomes transparent. Now, nothing is secretively maintained, nothing is secret now. Everything is open, clear, and transparent. Can be used by consumers to make choices. If there are consumers using their products, in that case, they can understand what is the effort that is put in by organizations to provide them with those products, etc. So those kind of things are possible that can build a reputation of the organization. So that's about the advantages. There are many disadvantages also with the league tables. See, until now, their primary objective is to provide benefit to the beneficiaries. Slowly, if it is a comparative analysis, it's a comparative performance evaluation. Slowly, the attention from providing benefits to these beneficiaries, from that, it will move towards being evaluated as the best. So, their performance evaluation, it will move towards performance evaluation rather than providing better services to the beneficiaries. Okay? So, encourages a focus on performance measures rather than the quality of service. So, they would become conscious. Um, their effort is to be evaluated better rather than providing the service. So, that's the primary objective why the NFPOs are established. So, it will slowly drift from that and it will come to the performance evaluation. This is costly and time consuming because somebody has to constantly observe their performance, and then it is costly and time consuming. If the quality of inputs are poor, obviously the output also would be poor. If the availability of resources are only not appropriate, they would definitely um, give out poor output. So, on that note, would it be appropriate to compare the performance? That's another disadvantage. Outcomes valued by society are not always measurable. The very important aspect about not-for-profit organizations are performance may not be quantified. It may be very difficult to quantify the performance. So the various variables that can be used to measure the performance, they may not be quantifiable. Okay. Differences between public sector organizations may make comparisons meaningless. A poor ranking, then finally we see that if somebody is ranked as poor or not up to the mark, that can affect their morale. So they may feel demotivated. That is a danger which is present there on being evaluated as poor or bad performer. So in that case, they may lose their confidence or their morale gets affected, and their performance in the future also may get affected. So that's another disadvantage. See, we are talking about performance measurement. So performance measurement, um, generally when we talk about performance measurement, it is about quantitative measurement. Um, the variables are um, taken in the form of numbers, numerical, um, financial variables are taken, and then performance is measured. They are important. Performance measurement by financial parameters. Yes, that's a very commonly used practice. A common practice or commonly used variables are financial variables like sales, maximizing sales, maximizing profit, minimizing cost, share market, stock market performance of the share prices, etc. Liquidity aspect of it. What are the funds that are raised? See, very easy to look into that because the data is all available in the financial statement. Easy to take those things and then measure the performance. But along with the financial parameters, there are uh, other non-financial performance indicators also which should be taken into consideration to measure the performance. What could be those non-financial performance indicators? See, having a good relationship with various stakeholders, like a good relationship with suppliers, is important. If they maintain good relationship with suppliers, the suppliers would be prompt to deliver the material on time, and the quality aspects will be taken care of it. If this particular aspect is taken care of, then in that case, it can be considered as success because the production will be carried on smoothly. Production will not have many defective units produced, etc. Because the supplier relationship with the supplier um, is important. Then the supplier becomes a reliable supplier, provides quality goods at reasonable prices, so costs will be under control. Quality standards can be taken care of it, or they can adhere to the quality standards, etc. That's one example. Similarly, having a good relationship with customers is also important. So customers become loyal customers. They come back again and again, and then profits can be maximized. Government is another stakeholder. Then complying with the rules and regulations that are laid down by the government. Um, Quality aspects, efforts to minimize on the quality. I mean, minimizing the units that do not meet the quality standards, maximizing the efforts on quality standards, etc. So that is important. Okay. We then we see that within the organization also management, the employees, they are important. If they are happy, implementation will be smooth and things can be implemented effectively. So we see that there are multiple non-financial performance indicators also. See, as much as importance is given to financial indicators, importance should also be given to non-financial performance indicators. See, what are the advantages and disadvantages? Advantages talk about easy to calculate, because see, customer, whether the customer is satisfied or not, good relationship with the customer, supplier, do they have good relationship with the supplier or not, are the employees satisfied or not, okay, um, did they produce defect free products or not, or less defect units are produced or not. It is easy to calculate, it is easy to measure the performance with the help of non financial performance indicators. Okay, they can be provided quickly, understood by non-financial people. One major aspect of it is many in the organization do not understand numbers. Any kind of a quantitative analysis that is taken up, the analysis do not convey any meaning to them. Therefore, we see the importance of visualization now, because even at this strategic level, the senior positions also, we see that people do not understand the numbers, the analysis, the statistical measures that can be used, and the interpretation. So it is not clear for them to understand. Therefore, the of late we see too much of emphasis given to visualization. The data is presented in a visually appealing manner so that it is easy for them to understand it and draw inferences and take decisions in the future. Okay. So we see that financial performance indicators may not be clear to many in the organization. They may not be able to understand things properly. Then we see that one more advantage of non-financial performance indicators is they are less likely to be manipulated. Financial figures can be manipulated. Financial statements can be manipulated. Some of the expenses of the current period can be deferred to the future periods, or to um, minimize on the tax amount. Expenses can be maximized. Things like that. Those things are possible to be taken up in case of financial statements. Here, the chance of manipulating non-financial performance indicators are almost not present, because so less likely to be manipulated. In terms of disadvantages, we see that yes, non-financial indicators are important, but yet at the same time, financial aspects and then indicators cannot be ignored. Too many variables to measure the performance. Under each category, we see multiple performance indicators could be there. So measuring the performance with the help of so many variables and analysis is provided, etc. That would be information overload. Then again, see, the output itself is very large, then interpretation out of the output also becomes a difficult task. Information overload. Then the pursuit of operational goals may blind managers to overall strategy. If they are focusing on multiple aspects, your the organizations that want to maximize their profit, primary would be wealth maximization of shareholders' wealth. The primary work would be with the help of financial indicators. We can see that whether profitability was maximized, sales was maximized, or costs were minimized. See, those are the um, aspects which would be taken into consideration. But here, non-financial performance indicators also focus. Um, they focus. Financial focuses on financial aspects. Non-financial focuses on um, whether the stakeholders are satisfied, or whether quality standards were met, or things like that. Non-financial nature. See, relationship with stakeholders is important. See, if they are taking care of all these things, there is a possibility that they may deviate from their main objective. Okay, the pursuit of operational goals may blind managers to overall strategy. See, in your examination, or let's say you do assignments also, no? So in your assignments also, possible questions I'm just talking about. In
Yeah,
a
okay.
yeah, you said something, Abhishek.
I just told okay, ma'am.
Yeah.
Assignments only.
Sorry. See, possible questions are on in a generic sense. The question can be addressed as, what are the non-financial performance indicators? So take a generic tone and then talk about, list out all of them. See, list as many non-financial performance indicators are there. See, assignment wise also, if you're asked to write an assignment on what are the financial and non-financial performance indicators, a simple small assignment, then you have to list out all of them, advantages, disadvantages, also talk about that. Okay. Now, in this particular context, very specifically, there is a model called as balance scorecard model, which considers all financial parameters and non-financial parameters. The last time, because I gave them an assignment on balance scorecard, I asked the students to select a company where balance scorecard was followed, and then how would they measure the performance of that specific organization using balance scorecard model. Okay, likewise, sometime I also evaluated a assignment where they were talking about, in a generic sense, what are the financial non-financial performance indicators, or select a company and measure the performance. So along with the financial aspects, also highlight on the non-financial aspects of the organization. So these kind of questions can appear in the examination or for the assignment, because the paper title itself is advanced performance management. So something related to performance will be asked for the assignment, general aspect. So you can also have other aspects, other topics also considered for examination and assignments, but this is likely to be tested in the examination. So there is a model called as balance scorecard. The balance scorecard, um, the concept of balance scorecard was developed by Kaplan and Norton in 1992. Now, as this is a tool that is used to translate an organization's vision and strategy into objectives and measures. Measuring the performance of an organization. Depending on the size of the organization, we can also understand the difficulty that is associated with measurement of performance. The large size organization, overall organizational performance, to measure that may not be an easy task. So in that case, the organization is divided into four different perspectives. See, only one is financial perspective. All the other three are non-financial perspective. So then, um, under each of these perspectives, what are they? First one is financial perspective. Second one talks about the customer perspective. Third is internal business process, the way they carry on the activities internally, internal business process. Fourth one is learning and growth. The learning and growth talks about the employee aspect of it. So there are four perspectives that are taken into consideration. But all of them, what is their performance? How is the performance? Measure the performance, account for the performance. But everything should be in alignment with the overall organizational objectives, the organizational strategy. Overall performance is what is important, vision and strategy. See, they all have to be aligned to that. It is not in isolation that any particular perspective is taken for evaluation. Okay? Then, after dividing them or after looking at these things from four different perspectives, measurement of performance will take place with the help of CSFs. In initial classes, we've learned about what's the concept of CSF, critical success factors. In the beginning, very beginning, the beginning, because students were not coming again and again and again. We've done 2-3 times. We've done about the introduction part, because one week one set of students, another week another set of students. So at least 2-3 weeks we didn't proceed further very smoothly. We were talking about the same topics again and again. Just give me 1 second. What are CSFs? CSFs are critical success factors, or identifying those factors um, which can contribute towards the success of the organization. Which are, if these factors perform well, it becomes possible to achieve the organizational objectives. Those are CSFs, critical success factors. So, for each perspective, CSFs have to be identified. Like CSFs to be identified under financial perspective, if at all. I'll put some other PPT. It becomes very clear to understand. So, there are four perspectives, as I have mentioned: financial, customer, internal business process, learning, and growth. So, under each perspective, CSFs have to be identified. The examples are given here. Sales could be, sales is one important factor. Sales, profitability, liquidity, market value, um, market performance, cost control. See, these are all CSFs under financial perspective. Then, likewise, under each of these things, we also have to identify what are the CSFs. Mere identifying the CSFs is not sufficient, but each CSF has to be measured with an appropriate KPI, key performance indicator. See, the performance measurement has to happen. The performance measurement is what we are focusing on. So the performance has to be measured. If we have identified sales as CSF, whether sales is doing well or not, whether there is any growth in sales has to be measured. So if there is growth in sales, sales is doing well. So that is um, that infers that the financial performance is good. Profit, if it is if we have identified profit as a CSF, then whether there is any increase in profitability, what's the profit margin, what's the trend of the profit over a period of time. So someday it has to be measured. If you talk about Stock market performance, what was the share price in the previous year or in the last few years? How did it vary? What happened to the share price, etc. Every variable which we identify that to be as a CSF, it has to be measured with a suitable KPI. If customer perspective is the second one, we have to identify what are CSFs. See, in this box, we see market share, customer satisfaction, retention, quality. If we talk about market share, how many customers out of the total customers present in the market, out of the total customer base, how many customers are their customers? So, how many of them return to them every time sales happen? Or is it always that it's randomly anybody comes and picks up their products? Do they see any loyalty towards their products, brand loyalty, product to that particular product, the customers returning back, or repeated sales happening? So that's how we measure that. If it is customer satisfaction, um, how do we measure that? Feedback is the best tool which can be taken. Feedback can be circulated some way, um, in person or online or whatever way. So a feedback can be collected. Customer satisfaction score can be calculated. So if there are any issues, then address those issues. If there is some kind of dissatisfaction, address those issues, and then redressal forums can be established, and then take the feedback from the customers, etc. So likewise, every variable which we identified to be as an important factor, critical factor for success, list out all of them, and each one of them have to be measured with a suitable KPI. Third one is internal business process. If we talk about internal business process, the way they carry on with the activities internally. So the aspects about productivity. Is there any improvement in the productive products that they produce? So is there any improvement in the number of units that they are producing? Efficiency, quality, where they able to eliminate the defective units from being produced. So those kind of things will take care of. If safety measures is one aspect of it, safety, um, are there measures which are um, measures to taken to ensure that safety is taken care of? What are the safety measures? In case if there is any accident that happens, then is there any insurance uh, coverage? If there is insurance coverage, what are the claims which were addressed in the previous periods, etc. So such kind of things will talk about their internal business process. Is there any customization, flexibility in terms of producing according to the convenience of the um, according to the requirement of the customers at that time? So flexibility in terms of production, flexibility in terms of delivering the goods to the customers. The last aspect of it is employees. So learning and growth. Learning and growth talks about whether the organization takes care of the employees' skill development, skill enhancement. So skill development, when we talk about it, we have to understand whether there was any training provided, any development sessions. So during the training sessions, what's the attendance of the employees? What is their feedback? What's the performance post these training sessions? Was there any innovation from the employee side, etc.? Multiple ways in which we need to look into that. Okay, that's about the balance scorecard. Okay, see, in individually each aspect, the focus can be clearly put on that specific aspect, that perspective, and then the performance can be very clearly measured. There are disadvantages of balance scorecard also to mention. At any given point of time, we would know the performance of each perspective individually, but the overall performance of the entire organization is not possible to know with the help of balance scorecard. It is not possible. The overall performance of the organization at any given point of time, it is not possible to know. That's one major disadvantage. Second disadvantage, what we can talk about it is, see, too many CSMs. See, we were discussing few CSFs, but see, depending on the type of business, the industry, etc., we see that CSFs change. There are many CSFs which can be listed out under each perspective. Too many CSFs also, the performance measurement becomes too complicated. So that is also not advisable. Okay, therefore, identify what are the suitable ones for that particular business. Identify such CSFs and use them to measure the performance. So right CSFs, identifying the right amount of CSFs and then appropriate ones, not making it too complicated. That is also important one. um, Identifying them is crucial for measurement of performance. That's one model for measurement of performance, which considers both financial and non-financial parameters. We see another model. Whenever you want to take a break or anything, you let me know. Only one student is there, so
No, ma'am, you
you-
can
yeah,
continue.
yeah. Anything, you just let me know.
Yeah, sure, ma'am.
Uh, the next model is called as it's given by Fitzgerald and Moons. This model is called as building blocks model. So they have identified that to measure the performance, there are three building blocks. First one is about dimensions. There are 6 dimensions. The first building block is dimensions. Dimensions should be taken into consideration. Second one is standards. Third one is rewards. So to measure the performance, there are 6 generic dimensions of performance. Out of that, the first two, competitiveness and then financial performance, what was their performance in the past? So the past performance in terms of competitiveness and financial performance should be taken into consideration, and the future aspects about, there are 4 other dimensions which have to be considered. What is the quality of service they would be providing, the flexibility in terms of delivering the goods and services to the customers at their convenient time, how would the resources be allocated, utilized. See, when resources are abundantly available, there is no issue, but there is some amount of scarcity. Effectively, these resources have to be utilized so as to maximize the profitability. So what's resource utilization? And then any amount of innovation which they are considering, any kind of research and development taken up. So what is the innovation? What would they be doing in future with respect to these aspects? Until now, how did they perform? What was their financial performance? And then market performance, that is competitiveness. Where do they stand in the market as against the competitors? So what was achieved in the past and what is that they aim to achieve with respect to these 4 dimensions? So the first aspect about performance measurement is the dimensions. What dimensions would be considered? Then in each area, they have to set the standards. So when the standards are set, see, when performance measurement happens, the, how do we measure the performance? The actual performance would be measured on a comparative note as to what did they decide on and how did they perform. So it generally goes in that sense that what was planned and what was achieved on a comparative note. So there should be something which was pre-decided, planned, or something set as a standard beforehand. So when standards are decided, these standards should be, I mean, set in such a way that it becomes practically possible for the employees to achieve. See, being ambitious is good, but um, Having standards based on those ambitions may not be appropriate, because SWOT analysis talks about what are their weaknesses also. So consider those things, and only those that are practically possible to achieve, such kind of standards have to be set. Okay, those are standards should be achievable. Achievability is one important criteria. If it is achievable, then employees also feel motivated. So from the employee's point of view, there is something given for them, that they have to take the ownership of the standards. Unless and until they take the ownership of these standards, they would not implement it properly. So they have to feel the ownership of whatever is decided, that it is their responsibility, it's their duty to achieve those things. Generally, if they are easy, or if they are possible for them to achieve, then they also feel motivated to achieve them. If they are very difficult to achieve, the standards are very high, they may feel demotivated and they may not implement it effectively. So they have to take the ownership. That's one aspect of it. On the same note, see, the standards are also uh, to be set which are achievable. Achievability is another thing. Then when standards are decided, in all fairness they have to be decided. See, some of them, they may be able to achieve certain things, some of them, uh, on the same note, they may not be able to achieve certain other things. So considering those weaknesses, in all fairness, the standards have to be set. Equity, fairness, equity, fairness, or not being biased. Okay? Then standards have to be set which are fair for all the employees. Those are the standards and the explanation about standards. Third aspect of it is rewards. So generally, when the performance is measured, performance measurement, performance evaluation usually gets connected to appraisal. See, but that is what we see everywhere. See, when performance is measured, even at a student level, also when the student's performance is measured, among the students, whoever stands first or at the top is rewarded. We see that. That's a common practice everywhere. In organizations, also, we see that. If the performance is measured continuously, somebody observes the performance and then the performance is measured, that gets connected to rewards. So, how should the rewards be decided? There are again three main concepts of rewards. The rewards should be clear. While defining itself, they should be clearly defined. No vague statement should be made. They cannot have a statement like on being effective, a reward of some percentage of commission or bonus. How do we measure effectiveness? How do we measure efficiency? Rather, quantify that on achieving a profit margin of some X percentage, or on selling X number of units, on or achieving a sales volume of some amount of some dollars value of sales, something like that. So there should be some clarity. If it is clear, then they can work towards achievement of those standards. The rewards also should be very attractive. If they are not at all attractive, no employee would feel motivated. They feel that it's better that they do not work hard, because it's already, I mean, anyway they are working, and then if they put in additional effort also, they would not get any great reward or attractive reward. If that is the attitude, they do not in the first place put any effort to achieve that. So it should be attractive, it should be motivating the employees to take up the task and achieve the task. Okay. And the rewards also should be based on controllable factors. Some of the factors are not under the purview of employees or under the purview of the department managers. Some of the costs are absolutely not under their control. Some costs which are allocated, some costs which were committed by the previous managers. Now, no matter what they do, they cannot control those costs. So we see that there are certain parameters, certain costs that are absolutely not under their control. See, because of the inflation in the economy, prices have increased. Let's see that is the situation. So if the costs have increased, if they are accountable for the increase in cost, see here this would not be appropriate because across the economy the prices have increased. There was inflation, so that was absolutely not under their control. So while evaluating them, while deciding rewards, then the parameters that should be considered should be controllable factors which are under their control. Their decision, by their decision, they can have an impact on these factors. Instead of that, if they consider all uncontrollable factors to evaluate their performance, that would not be appropriate. So reward should be based on controllable factors. So this is the model about Fitzgerald and Moon's building block model. Exclusively case study on this model. Little less chances are there that because the content is also not much. So exclusively a case study may not appear, but because performance measurement questions are so many topics are under the same broad heading performance measurement. So a question with 2 3 topics of performance measurement can come in the examining. One such topic would be Fitzgerald and Moon's building blocks model. We see there's another model given by Lynch and Cross. They have given they've given the model, performance measurement model in the form of a pyramid. In the form of a pyramid, we know the size, the structure of an organization is in the form of a pyramid. We see that at the bottom is the operational level, middle level, and then at the top we have the strategic level. So each one of them have a different role to play. Strategic level decides on the overall objectives of the organization. The planning at the organizational level is taken up by the strategic level. Middle level in detail planning, allocation of work, assignment of tasks, etc. Resource allocation, all those things are taken up by the middle level, and at the operational level, it is the implementation. So, using the same model, now we see there are operational levels, middle level, strategic level. At the pinnacle of the pyramid is the corporate vision, the basic objective, the overall objectives or the mission of the objective, or what way they would proceed further to achieve the objective of the organization. So that plan is there, or that direction is set at the pinnacle of the pyramid, at the top of it. Everybody now will work towards the achievement of the corporate or the overall objectives of the organization. This pyramid is looked into from two different aspects. That's why it's split into two parts. See, on the right hand side, we see the internal efficiency. On the left hand side, we see that it is external effectiveness. So the right side takes care of the financial aspects. The left side part of it takes care of the commercial aspect, commercial or the market. So now the financial aspect, the budgets related to the cost that would be incurred in terms of producing the products. Okay, that see, at the pinnacle we see that the corporate vision is there. Then the overall organization, the planning for the overall organization will be taken up at the strategic level. So at that strategic level, they look at the entire organization from internal aspect, financial perspective, and the commercial perspective. See, the organization, what are the products and what are the goods and services which they would be producing. So what are the costs or production budgets or budgets related to that commercial financial aspect of it. the overall organization wise, what products, what services would they be producing? It's just not about the decisions about products and services, but where would they sell their products and services? The organization, their presence in which market. So that is the next aspect of it. Where would they sell their products and services? Commercial market, which market, domestic, global, international aspect. The financial, further when we come down from the strategic level to the middle level. So the middle level planning will be taken up at how many units will they produce. Okay, overall what products and services is already decided. How many units will be produced? What is the task of each department? How much resource? So what are the resources available, and how much of them should be allocated? That is decided by the business operating systems or the middle level. Okay, from the commercial point of view, in the market they aim at customer satisfaction. Okay, then we also see that there is aspect about flexibility. Flexibility is about producing according to the convenience of the customer. According to the time targets that are set. Flexibility according to the customer requirement about when to deliver, where to deliver. Flexibility internally when we talk about when would they produce that. So production, when would they produce that to cater to the requirements of the demand that arises. So we see that the at the middle level it's about the productivity, it's about the customer satisfaction. Both of them taking into consideration, we see that there is an aspect of about flexibility. At the operational level, we see the departments and work centers implementing the plans which were decided at the earlier levels. So departments and work centers internally would look at or focus on minimizing the wastages, reducing the cycle time. Cycle time is the time which requires from the time investment is made into raw material till the time this investment gets converted back into cash. Raw material gets converted into finished goods. So the time period, during that time period when raw material gets converted into finished goods, these finished goods have to be sold. So the time period from the time finished goods are produced till sales happen. By any chance, if the sales are on credit basis, at the end of the credit period, the amount will be collected. So the entire time period that is required for them to convert back their cash, which was invested into inventory, that's cycle time. So minimizing the cycle time. Longer is the cycle time, higher would be their cost of capital, storage cost, etc. So at the department level, they aim at quickly converting raw material into finished goods. Okay, um, ensure that they don't have to store a lot of goods and goods in the store rooms, etc. Minimizing on those costs. So minimizing on wastages, minimizing on cycle time. That's an internal aspect. External aspect would be about whether quality products were delivered to the customers, delivery requirements were met by the marketing aspects or the distribution aspect of it. So delivering the goods at the convenience of the customer. So together, the internal efficiency, the external effectiveness would be taken care of so that ultimately the organization objectives can be achieved. Okay, so that's a model given by Lynch and Cross performance pyramid. So so with this, we would end with the performance measurement. As such, the models that are there. But believe me, at every topic of the papers, the syllabus, somewhere or the other, the topic gets connected to performance. As such, straight direct questions which are on performance measurement, we can talk about it as we end with this particular topic, performance measurement model. The next topics what we have are we have a topic called as corporate failure. Basically, that is also about performance measurement as such. So corporate failure, then the remaining topics, whatever we have, are all related to the quality aspect of it. So different models that are given, um, they talk about the quality aspects of it. So broadly speaking, we can talk about that. The two main topics are remaining. One is corporate failure. Another one is about different aspects about quality, different models that are given for quality.
Ma'am, in advanced performance management is more of a theoretical, no, ma'am.
More of theoretic, but
Like
numerical.
when compared to performance management, I see
Uh,
more theory questions or
more
case
theory.
scenarios.
See, one easy way to remember, I mean, whether numerical will appear or not. Assume that if a topic was never tested earlier in any of the papers, every chance that it can be tested now. See, transfer pricing theoretically it was studied in PF. We do agree. Even the questions were also very basic. But now transfer pricing can appear in the examination as a case study pattern. So any numerical calculations should be taken up. Economic value added can be taken up. Performance measurement. I said appendix will be given, but let's say sometimes with certain assumptions you only have to calculate the ratios. So maybe differences in the opinion about what should be there as profit, what should be there as assets, etc. um, take up the calculation also. Something which was mostly from my observation, if there was any topic which was not done earlier, which was not evaluated earlier, has every possibility to be evaluated now, both in numerical as well as non-numerical also. For example, we've done BCG matters. The calculation also we've done. We've done one case study earlier. It was never tested any other in any other paper. So it has every chance to be tested here. If it is asked, it can be asked as a numerical question also. Risk analysis, the maximin, those kind of numerical questions also are covered. So they have chances to be tested. Otherwise, um, it's basically about analysis. What is the expectation from ACCA? The body of ACCA want the candidate to become, um, I mean, to be able to take decisions if situations arise in the organization. So they should be equipped with that kind of skills. So the questions are framed in such a way that if there is a scenario existing in an organization, what is the approach of the student? So they test here itself. Then the student will be placed at the level where the decisions can be taken. So students with these qualifications, they don't join the organization at the entry level. Now, so you people are working professionals, so your story is different. But let's say a graduate student pursuing these papers, they don't have any kind of exposure to what would be going on in the organization, what's the real scenario in the organization. For them to join the organization, the, I mean, questions are framed in such a way that the student has to take a uh, he has to approach in a particular manner. There is no such thing called as a right wrong answer or anything. What is the approach of the student will be evaluated. That's why when we read through the examiner comments and then sessions, we understand that um, see what do they expect from the student, that the students understands what the scenario and gives his opinion. So that is how the examinations would be. So numerical, one important, one broad understanding from my observation is, if any topic was not tested earlier, very great chances are there that they would be tested now. If like budgets, they have already learned and given their tests in different other papers. So now budget preparation will not be asked. So what will be asked? They already prepare a budget. Is it an appropriate budget or not? We have to comment. Like that, the preparation would be. So read through the see, no case will be repeated as it is, but read through the examination kit and the answers and the comments of the examiner. What is their approach? What would you, as you read through the question, how would you approach that? First, you have some idea about that. Compare that with what's the answer given. So, is it matching? If it is not, so what should be your approach towards that particular situation? So that is how you proceed step by step. I think that's the way APM exams have to be. I mean, the preparation for APM exams have to be taken up. What's the strength of your class?
Ma'am, it's somewhere around 6 to 8, ma'am.
Do you find it easy to pursue these this program and work? Because this is also so.
Yeah, ma'am. Actually, before this, I was doing my CA course.
Mm,
So there, I cleared almost like first semester, first group of IPCC.
mm,
Later, the second group of IPCC, I was not able to complete it. So
mm.
later, after my completion of articles, I started working with the company, MNC company.
Okay.
So now I don't find it that difficult, and it's not that too easy. Also, it's
Mm,
quite manageable. What I feel.
yeah.
Yeah, because for the first semester, somewhere hardly I studied for like 2 months. That's it.
And now that you also have corporate exposures, I think it will be not as
Yeah,
difficult
it's
for other
quietly
students
relatable,
and
ma'am. The
related.
topics which we
So,
are learning. Yeah.
mm, just have to have conceptual knowledge about different topics that are covered in the examination, because the answers would be based on the concepts only. Randomly, we cannot pick the answer and write. Of course, your approach matters, but if they very clearly say that, let's say if it is balance scorecard. So, what is balance scorecard? If let's say, even if it is given for 2 marks, their expectation is that a student should know what is balance scorecard. So, conceptual knowledge is important, and relating that scenario to the concept and writing the answer is also important. Randomly, we can approach questions. There is no issue with that, but I mean, if you are writing randomly, you are exhibiting that you are not aware of what is that concept, theoretical concept. That is again a danger there. So limit your answer to that explanation of that model or method or anything, and then proceed further. So they know how to assess that. Learn the concepts also, and then give your answers.
Okay.
Most of the time, I mean, the answers as much as possible should write. You should write it in bullet points. Um, See the danger of, because when we are writing in a paragraph form, what happens? Unknowingly, also we repeat the same point again and again. Maybe we get carried away by the size or the content of what we are filling into that paragraph. So a repetitive, I mean, repetitions should be avoided. So advisable is write in bullet points. So each point, see, let's say each point carries 1 mark. Some of the topics, very few points would be there. They may carry more than 1 point, 1.5 point or 2 points or something like that. So, each point you will earn that many number of points. So that's an easy way. You can also keep an easy track of how many points you have covered, etc. So that's one better way to approach the answer.
Yeah. Okay, ma'am.
We'll do the remaining topics next week, because only two. I mean, of course, there are under quality also we have many other things.
Yeah, sure, ma'am.
But the only concern is many students are not there, so that's the only. course, recordings
Yeah.
will be there.
Yeah, sure, ma'am. We
But,
can start with on next week.
okay. So if one class we take, the content content delivery will be done. The remaining number of classes that are allotted to us, each week we will focus only on the case studies. Maybe if the strength is good, next week instead of proceeding with these topics, corporate failure and others, I will do case studies in the next class. If the strength is less like today, maybe we'll complete the content and then in the coming weeks we'll do the case studies. Either ways.
Yeah. Okay, ma'am. Thank you.
Okay. Thank you then. Good day.
Yeah. Good day, ma'am. Happy weekend.
Okay.